Hello, everybody. Welcome to Tuesday. The S&P 500 was down a little bit more than 2% today. It was an interesting day. I had an alert set at the S&P 500 around 3940 level, and we jumped through that alert. It triggered. We got to 3945, and then the market really started down. And I have that alert there because there was an awful lot of overhead resistance right around that point. And it seems like we hit that point, and the sellers came in and really didn't allow the market to jump through that resistance level. We did get some other information about consumer confidence surveys, which were very negative, things that that would worry the market as far as that goes. We did use some the opportunity today with the continued fall of the market to start to continue to get more defensive. I've mentioned several times before, I have three different types of investment depending on what's happening, methodologies depending on what's happening with the market. So in that kind of upward trending market like we had in 2020, we're invested in a lot of little trend pieces trying to catch those trends when the markets go down, but the early indicators for recession are still hanging in there. Then we just want to rebalance. We want to wait for the market to kind of stretch down and rebalance at those points, and that's what we've been doing so far this year. But when the early indicators for recession start to curl over and start to say there's a possibility of recession coming here in the near future, and the market is still coming down, then you want to start to get defensive. And so that's what we started last week, and we're continuing to do that. We'll continue to use these periods to kind of take some of the stock market exposure off the table. And I think that's the wise things to do here, just to wait and see how things are going to play out. There are some scenarios where things could work out quite well. We are seeing, a softness in energy prices and gas prices in June. We're seeing, some of these things that like China today announced that they were kind of easing some of their COVID policies for travelers. And these are things that the market is looking, forward to as far as that goes. We could see some of the inflation reports that are coming out. There's one on Thursday for PCE. And of course, next month we'll have the CPI. Maybe the top line CPI number drops down and the Federal Reserve starts to do a half a point, increase instead of 3/4, which is kind of what the market's expecting right now. All of these are things that could get the market kind of going in the other direction. So we have to be careful to get too pessimistic or too optimistic here. We're in this point in time where things are kind of, battling it out to see where this is going to go as far as that goes. So that's why we're just kind of neutralizing some of the exposure to the stock market, and we'll see, how that goes and see how this plays out. But things can change quickly, so we'll be watching for that. So nonetheless, thank you for watching today. Look forward to seeing what's going to happen tomorrow. Thank you very much.